Welcome back. You're still tuned into Mid-Cap Radar. Let's talk about the real estate sector now. There's an interesting report which has come by from Knight Frank. Redevelopment projects are on the rise in Mumbai, and in their latest report, they indicate that these projects could unlock nearly 326.8 acres of potential land area in the city. To discuss more, Gulam from Knight Frank is joining us now. Gulam, good afternoon. Thank you so much for joining in. Well, we know now Mumbai cannot expand horizontally. It has to be developed vertically, and the only way to do that is redevelop the entire city now. I wanted to understand, we've been seeing this from 2020, the big surge in redevelopment. Which phase of that cycle are we in? Do you think we've peaked out? Because there have been some conversations that indicated that maybe there have been some issues that builders are facing in terms of bidding very aggressively, and that is something which could impact the market overall in terms of growth. What's your take?
Well, absolutely bang on. The point that you made is exactly what we are trying to convey through this report to the masses, that the situation is a little scary. We are reaching a position where the promises made by developers to the existing society tenements have reached a certain situation where, if at all, market has to turn, because we're talking real estate is a cyclical scenario. So we already had 3 to 4 odd years of an up cycle already behind us. So I don't know where will we hit that peak point, after which there would be a slippery wicket. And if at all in next times to come, a year or two, please understand, once you sign a DA, you take at least 4 years to 4.5 years to finish the project. So if at all there is any change in the cycle, then the feasibility of the whole project can go for a toss, and we are reaching that scary situation. That's what we are trying to convey through our report today.
Right. Gulam, so you're giving, moderating expectations as far as both buyers as well as developers are concerned. We want to understand, developers, number one, they give increased carpet area. Number two, they actually pay for rent, especially when it comes to redevelopment. So overall, P&L, what is it that they can actually expect to make from the projects? They do increase the number of flats, but what kind of margins are they working with?
See, first of all, to put it across, it's, the biggest aspect that they're giving. The big cost is to take care of the tenements, to give them the additional area that you spoke about. They also give a very large corpus that is even bigger than the rents that you're talking about. So there's a corpus for these guys to maintain their societies in future. So extra area, corpus, rent, these are all costs that go towards the existing tenements. And of course, creating the supply, overall cost of construction, approvals, and this and that. So net, on an average, we are looking at about 20% as the return for the developer in this whole game.
Okay, so, from the P&L understanding, of course, costs are higher. But at the end of the day, is it capital efficient generally, Gulam? Because when we had conversations, a lot of listed builders are actually looking at redevelopment as a big opportunity. What do you have to say about that? Is this something that the stock market should be worried about that as well if they expand that portfolio?
Well, first of all, look at it this way. The big players or the developers that we're talking about have a bottom line, a benchmark below which they don't touch. So typically they're talking about projects which are giving them minimum 1,000 crore of a top line is what they enter into. But then otherwise, overall, it's such a large market. There are a few players who are catering only to this segment. Now, your problem, like if I talk about a problem from the tenement perspective, it's not really that huge a cost that you require to spend over here compared to a greenfield project. For buying a land, you're paying huge amount of money upfront. But in case of a society, because you're giving them right now only the corpus you are setting aside and rents is what you're giving them. So you actually have much easier cash flow to start with, because your initial cash flows are much lesser compared to buying a land and developing it. So net, this is a great avenue. This is a good way for any developer to participate into. And obviously with the listed players also coming in, we do see a good a P&L or a new business emerging. However, as I said, the challenge is it's become so competitive that if you're promising moon to the developers, the chances that you will fall flat on your face is higher. So right now, the need of the hour is to leave something on the table, leave some cushion. If at all market turns, you are well taken care of.
So is it from a consumer viewpoint, if somebody is looking at their building getting redeveloped, so they should be cautious as well, according to you?
Indeed, indeed. Look at it this way. Today, the moment you are giving your keys to the developer and developer has demolished your building, you are at his whims and fancies, at his completely going by what he's doing. So tomorrow, if at all markets turn and he has promised you a very huge promises are made, the developer may run away. And in that case, you'll be left high and dry because all you know, the next year's rental may not come. They normally give you every year's rental en bulk. So the next year's rental may not come and your house is gone. So extremely scary situation for the tenement owners who are giving their keys to the developers to be very sure that it's a very, very credible developer they are tying up with. Otherwise, it's a very scary situation.
Understood that. Gulam, would you agree? There's a lot of noise, especially when it comes to social media, about select markets of the country, especially when you look at the NCR region. Prices are moderating. Most of the flats have been bought by people not really looking to live, but rather, investors. And also South Indian market. Do you think there we've reached an oversupply situation?
Well, first of all, let's talk. We are sitting in Mumbai. Let me talk about Mumbai. At least Mumbai is not showing any such sign. Month on month, we've been watching, and even the August data is barely a percentage or two less than YOY last year's August. July was the same. June was better. And YTD in Mumbai, at least, we are still 11% over the last year's numbers. So net, Mumbai is defying all those talks that you're talking about. But Delhi is definitely gone slower, and Bengaluru. Hyderabad and Chennai are doing better. In fact, Pune is doing exceptionally well. So Mumbai and Pune are the two markets which are actually defying those the points that you're raising. Otherwise, yes, Delhi is a market to be worried about, and so is Bengaluru.
Gulam, just to follow up on that, because I was having conversations with some other analysts as well, the indication was because of the fear around IT sector, there's some pressure coming in Hyderabad and Bengaluru both, but you are suggesting otherwise. Is that pressure coming only in the unlisted space and the bigger players are able to continue their business as is, especially in Hyderabad and Bengaluru?
Well, as I said, Bengaluru is facing the heat right now. Bengaluru is going through some slowdown. Hyderabad is not yet. Maybe in times to come, the situation may change in Hyderabad. Chennai was always a smaller market, so it continued to perform the way it was, in fact, doing better than what it was doing earlier. Pune is, of course, another IT market, but Pune is not entirely depending on IT. It is also largely manufacturing, automobile and pharma, etc. So Pune is a different market, but only IT-dependent markets. You're talking about Bangalore is showing signs of cracks already. Hyderabad has been doing well, but we need to wait and watch.
Okay, thank you so much, Gulam, for joining us, giving us a sense of how exactly the redevelopment market in Mumbai is going and giving us a slightly cautious view, especially when it comes to consumers in terms of giving up their buildings in hopes of a bigger space. Well, coming back to the markets, have a look at the mid-cap index, continues to move quite high, 0.8% higher. A couple of stocks on the radar. Have a look at credit card player, SBI Cards. That particular stock has moved near the day's highest point, doing quite well throughout the trading session. That's doing quite well. The other one on the radar is Fortis, especially in the last half hour. That particular stock has moved quite high. And the entire insurance pack, after a couple of sessions of significant weakness today, has seen a bit of an up move. Names like HDFC Life, SBI Life, those stocks are doing quite well in the session today. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.